So it is literally the single most anxiety-inducing question keeping new e-commerce entrepreneurs up at night. You've got your product ideas, you're totally ready to launch, but then you just freeze. You wonder, do I actually need an LLC for dropshipping before I make my very first sale?
No, absolutely not. Let's enthusiastically bust this widespread myth right out of the gate. Take a deep breath and let that pressure go. The simple one-word answer is no, you don't need one to get started.
Welcome to this explainer. Today, our core goal is entirely focused on demystifying the legal evolution of a dropshipping business. We're going to take the confusion out of business structures, cut through all that legal jargon, and look exactly at how your business protection should evolve as your sales actually grow.
Okay, here's our roadmap for today. First, we'll tackle the big LLC myth. 2. Sole proprietorship versus LLC. 3. Hidden dropshipping legal risks. 4. When to switch structures. 5. The steps to form an LLC. And finally, number 6, looking beyond the LLC shield.
All right, let's dive into part 1, the big LLC myth, debunking the most common dropshipping misconception. We're going to look at the reality of starting out on major e-commerce platforms.
So, the truth is, an LLC is generally not required to start a dropshipping business or sell through platforms like Shopify, Amazon, or eBay in the US. You can absolutely begin validating your store and testing your products simply as a sole proprietor. Seriously, you do not have to drop hundreds of dollars on formal entity filings before you even know if your product's going to sell. Major platforms generally just require identity verification, a bank account, and tax information. And honestly, when you're just starting out, that can simply be your personal social security number.
Moving right along to part 2, sole proprietorship versus LLC. This is all about choosing your testing ground. You know, every successful business starts somewhere, and phase 1 is your testing and validation period, where simplicity is absolutely your best friend.
When you compare them side by side, it's pretty fascinating. The sole proprietorship is practically frictionless. You're looking at low admin work, simple record keeping, incredibly low startup costs, and super simple Schedule C taxes. But there is a catch. You are fully, personally liable. On the flip side, the LLC offers that coveted personal asset protection. But of course, it comes at the cost of state registration fees, ongoing compliance, and pass-through taxation. So it's really a balancing act between convenience and protection.
Let's translate this legal alphabet soup into plain English, starting with the LLC, or Limited Liability Company. It's a state-level entity that gives you a formal structure. Essentially, this is what legally separates you, the person, from your business, the entity.
Next up is your EIN, or Employer Identification Number. Basically, think of this as a social security number specifically for your new business entity. It's issued by the IRS, and you are absolutely going to need this to open a proper business bank account or if you ever plan to hire any employees.
Then we have the seller's permit, which is often called a sales tax permit. This one is local, and it lets you legally collect and remit state sales tax. Now, whether you actually need this depends heavily on where you have a physical or economic presence, what the law refers to as nexus, which is basically a strong local connection, and of course, specific marketplace rules. And finally, the resale certificate. Let me tell you, this is a total game changer for your cash flow. Because you intend to resell the products to an end customer, this certificate allows you to buy those products from your supplier without paying sales tax at the time of purchase. It keeps that upfront money right in your pocket, where you can use it for things like advertising.
Okay, part 3, hidden dropshipping legal risks, exposing supply chain vulnerabilities. As you move from your phase 1 testing into your phase 2 scaling, the reality of dropshipping really starts to shift.
Think about it. You might never touch a single piece of inventory, but massive legal exposures still exist in your supply chain. If a drop-shipped electronic device catches fire, you can face a product liability claim, even though a third party made and shipped it. If your overseas supplier sends counterfeit goods, you're looking at intellectual property risks. Add in the constant threat of sudden chargebacks from payment processors or supplier disputes over non-delivery, and you can really see how these unseen hazards can directly threaten a sole proprietor's personal savings or even their home.
Which brings us to part 4, when to switch structures, the tipping point. This is the exact strategic moment you need to upgrade your business structure to protect yourself from everything we just went over.
As the scale tips from just testing a few t-shirts to selling high-risk items like electronics or children's toys, or maybe you're signing major supplier contracts or bringing on partners, your strategy has to tip as well. That increase in complexity and risk, that is your trigger to form an LLC.
There is no magical universal revenue threshold here. The decision to switch is entirely driven by your shifting risk profile and increasing order volume.
All right, part 5, steps to form an LLC, moving from validation to protection. So, you've hit the tipping point. The good news? Forming an LLC is a highly logical, completely manageable process. Here is your exact playbook. Step 1, choose your state, usually your home state to avoid double fees, and make sure your business name is available. Step 2, appoint a registered agent to receive official legal documents. A quick pro tip from our sources, you can use a reliable service like Northwest Registered Agent to handle this step for you. Step 3, file your formation documents and pay your state fees. Step 4, draft an operating agreement to define exactly how the business is run. And Step 5, get that EIN from the IRS and open a dedicated business bank account.
So the absolutely crucial point here, and I cannot emphasize this enough, is that mixing personal and business funds destroys your LLC's liability protection. If you take away just one thing from this explainer, let it be this. It is a fatal legal mistake called piercing the corporate veil. If you, say, buy your personal groceries using your business debit card, a court can literally decide your business isn't a separate entity at all, leaving your personal assets totally exposed to lawsuits. Keep them completely separate.
That takes us to part 6, beyond the LLC sealed, building a resilient business. We need to shift our focus just a little bit here. An LLC is fantastic, sure, but it is not a magic bullet. It doesn't automatically stop people from suing you.
To create a truly bulletproof dropshipping operation, you have to partner your LLC with a few essential layers of protection. Think of your LLC as a shield, but these next essentials, they're your armor. You still need general and product liability insurance to actually cover the costs of a claim. You need reliable suppliers with proven clean track records so they don't ship knockoffs. You need perfectly accurate listings and transparent return policies to prevent chargebacks. And of course, you must strictly adhere to federal product safety compliance, especially in regulated categories. Now, as you build this resilient business and your order volume really surges, manual processes are going to become your enemy. This is where automation software steps in to scale with you. Tools like eSync can handle real-time stock monitoring, auto-ordering, and tracking workflows. It drastically reduces the manual errors that lead to angry customers. But always remember, while software can handle the day-to-day workflows, the legal, tax, and compliance responsibilities, those always remain entirely on your shoulders as the business owner.
So we've covered the myths, the transitions, and the necessary protections. Now, I want to leave you with this final provocative thought to evaluate your own setup today. Look at what you're selling, look at your sales volume, and look at your personal assets. Does your current legal structure truly match your actual business risk level? If you've been ignoring the signs that it's time to scale up your protection, today is absolutely the day to start optimizing your legal strategy.